So ahoy there and welcome welcome all. Thank you again for taking the moment out of your day to spend it with us and the community here. We've got lots of the regulars, one or two new faces. Alan, Brian, Colin. Somebody called Nokia 7. Hello, Nokia 7. Rodrigo, Russell, Vito, Wally. Again, if I've not mentioned your name, nothing personal. Just skipping down the list as usual. So we've got a fun-packed session today. I'm going to jump straight into it this time. Instead of giving my view on the markets, I've posted my views in the market in the Slack group in our member community. What we think was going to happen is happening. We were looking at the markets exploding. They're exploding. And that's kind of influenced today's session. How do we find explosive stocks to day trade? Now, although I'm talking about day trading stocks, I appreciate not everyone wants to day trade. That is my focus at the moment. The volatility, the range of movements at the moment is exceptional. And it has been for almost a year now, for probably obvious reasons for most people. So there's great opportunity. Now, just because I'm going to be focusing on day trading and looking for day trading stocks, as you will see, those opportunities from a day trading perspective can also roll into a swing trade. So just because that's what I'm focusing on today, and that's going to be the lens I'm looking things through, we'll see lots of examples of, well, what if I want to swing trade? What if I don't have time to day trade? We'll look at a little bit of both, but again, just that the focus this week is day trading. I'll probably do a follow-on and look at things from the other perspective next week, and how to use the same scans and similar scans to find explosive stocks for swing trading. So that will be, no, I'm saying it, that's going to have to be next week's workshop. But nonetheless, we'll have a similar theme. So the way that these sessions roll, if you are new, and I can see there's lots of new names and just logging in still. So the way that these sessions roll, the agenda, normally it'd be 20, 30 minutes of looking at the markets. I'm not going to do that initially. It should become obvious later. I want to go through the educational piece first because it explains how to look at the markets. So we're going to do that first this week. We're going to be looking at finding explosive stocks. We're going to look at some of the trades that I found yesterday. I've had a little bit of a dry spell with trades, meaning that there's been very little opportunity to trade. So we'll look at some of those at the moment. Yesterday, as the market starts to open up, which we started talking about on Wednesday and Thursday, the number of trades are becoming more and more apparent. And we've got a good session today because the market's opening up. We've got a lot of variety of different trades and trade opportunities. So we're going to explore that in more detail in just a minute or two. If you are new to these sessions, I like to get it out there early. I am not a Wall Street guru. I've not worked in the city. I'm one of those rare breeds that figured it out on their own. I'm just a regular guy who cracked the code. I've been interested in the charts since I was, well, not the charts, the markets and finance generally, since I was about 15. So I got into this very early, and again, one of those rare people, I managed to figure it out. Looking back 25 years later on the career, I did it the hard way. There's certainly an easy way and a hard way. I didn't know there was a different way. The different way is what you're all familiar with. You log on to listen to people like me. You try and figure out, okay, this is a style of trading that I like, and then you pursue it. I didn't know that when I started out, but nonetheless, I figured it out. And the way that I like to do things these days is I like to have what I refer to as a production line. You're going to see part of that in a moment with how to find explosive stocks. But I want it for myself first and foremost. I want to know what I'm doing, when I'm doing, and why I do it. I hate the indecision, the discretion, it could be, should be, would be, possibly. I hate that indecision. I want to know there is the trade. So that's what I do. And it means that it's easy to replicate. And I very often refer to the way I approach the markets as a production line, because that's how I approach it. I don't want to do a custom build every time, AKA discretionary trading. I want to know exactly day one, step one, do this, put the trade on. And as some of you know, some of the long-time members know, I was quite ill through January. I've got a variety of underlying medical issues. We'll save that conversation for another day. But it means that from time to time, I'm not well. And it's for that reason that I want it. You know, I don't have to think about the process. I can just follow the process. And the great news is if you want to, it's simple for you to replicate. And we're going to see that again in just a moment. Nonetheless, I'm what most people might call a lifestyle trainer. I'm just a regular guy. I want to help you see your success. It isn't my personality, my nature. I enjoy doing these sessions and sharing the fruits of my labor, mainly because I never had anyone when I first started out. I made all the mistakes, as I alluded to a moment ago. I made them all. I learned from them fast, and that's what most people don't do. To get to where they want. Anyway, I like to have a laugh. I like to have a joke. I like cake. I like a good time. I don't spend all day, every day doing this. I want to log on. I want to do it for an hour. Again, you'll see this process in a moment. All of this is going to make perfect sense, because then that means that I can enjoy one of my favorite pastimes, which is in the mornings, reading a book, enjoying a coffee, having a leisurely roll to the day. I'm in the UK, so my morning, I've got several hours before the US markets open. And then I like to do the opposite of an evening. I like to enjoy a little bit of a wee whiskey in the evening, and the same reading of the book, maybe watch, something interesting on the Ogle box. But nonetheless, that's my life. That's what I enjoy doing. And plus we're on lockdown here in the UK. We can't go anywhere anyway, even if we wanted to. But the point is, you should just be able to zero in on what you want to do with your day trading, swing trading, investing. I spent 12 years day trading, and it's not healthy for any long period of time to day trade or to swing trade or just to look at the charts. Other things start to be impacted. And again, I've got firsthand knowledge of this. You know, you can go batshit crazy essentially if you do one thing constantly, and especially if you're not seeing any results from the fruits of your labor. Anyway, that's what we're going to help you with today. That's a little bit of my backstory. Maybe it just helps you realize that, I've been doing this a little bit of a long time. As I mentioned, I've been doing this since the mid-90s, full-time since 2001, hand-drawing charts since the early 90s. Yes, I didn't have a computer when I started out. I used to hand-draw charts. Oh, the fun and games that was. Been calling most of my trades out in real time since 2004, managed client accounts with assets under management of around 10 million, specialized in Forex and day trading for 12 years. These days, again, stock options is my focus, and it's day trading and short-term swing trading is just my current focus. That's the flavor of the pulse of the markets that seems to produce the best results for me. You can speed things up or slow things down if you want to swing trade or day trade, or you want to do longer term trading. Just change the time frame on your chart. That's all you need to do. I've mentored and coached thousands of students all around the world in the last 17 or so years. The one thing that is universal is I genuinely I've got a lot of time for serious traders, whether it's in an official capacity and I'm mentoring you as a student, or if you've just got a question. As I said earlier, like it's genuine. Like if you've got a question, you don't know where to go, shoot me a message. At the very least, I'll point you off in the right direction. A big part of this trading game is figuring out what's the right path for you, because I'm not naive enough and silly enough to think that my way is the only way. A big part of this is using, my process as maybe a foundation, a launch point to helping you figure out your path, your direction. It may be exactly the same as mine, and that's great. But if it's not, it just gives you a launch point to go somewhere else. Anyway, that's me. Let's jump into finding explosive stocks. I think everyone who's going to be here. So finding explosive stocks. We've got a few slides just to go through. I want to go through this at a slightly slower pace than I normally do. If you've got questions along the way, pop them in the chat box and I will get to them. But finding explosive stocks to day trade. We're going to be looking at, now I've made the decision, we're going to be looking at finding explosive stocks to swing trade next week. It's going to be a similar process. So again, just because I'm looking at day trading opportunities doesn't mean we can't use the same process. We'll touch on it a little bit because there's some good examples. But the starting points for me is always going to be a universe of stocks. I've spoken about creating a universe of stocks in the past. I want to be very clear. I'm not looking at every stock every day. There's like 27,000 stocks just on the US markets. I'm not scanning all of them every day. I've got a universe of stocks which are liquid, they're actively traded, and they've got options, specifically weekly options, because I know that my end result is I'm going to day trade and I'm going to do it with options. It's not essential to day trade with options. It's cost effective for me. And you could do it with spread betting, shares, CFDs, Forex. If you wanted to do it with Forex, again, I'm looking for stocks, but I'm trying to illustrate you can express the trade. That's a fancy way of saying put the trade on in any way you want. But because I know that, I've got certain criteria for my universe. So that means that my universe that I'm scanning is about 300 shares. I'm only looking at what I consider to be the top 300. So this top 300, again, we've gone through how to create this list in more detail previously, so I am glossing over it very quickly. Active traded, an average of at least 1 million shares. It's not GameStop where it's been dead in the water. It's not a penny stock. It's not low float. I'm not doing any of that nonsense. I'm trading active, liquid trades. I want to get in the trade. I want to get out the trade. I'm looking for a reasonable move that could happen most days. I'm not looking for something crazy like we've seen in the news recently. That happens once in a blue moon. I want something that's going to happen every day. So that's active, average of 1 million shares. They've got higher dollar amounts. In my case, I'm looking for $50 or more as my dollar amounts. Again, appreciate not everyone wants to do that. So you can include the $20 to $30 range. You'll get a similar 300, 400, 500 share list as well. I'm just explaining that I want to do that $50 or above. So average of 1 million shares, $50 or more, and they've got weekly options. That's what I'm looking for. And that gives me about 300 shares. So that's what this list is. We can see just the top list. I'm only interested in what's moving. So the first thing I'm going to do with this list, again, you've seen me do it practically many times. I just want to focus in on just this element because sometimes it's difficult to see on the projection. So you should be able to zoom in on this quite easily on the slide. So the next thing I'm going to do is I'm just going to sort that column that's highlighted in red. Now that's the volume today. Now when I'm doing this pre-market. So at least 30 minutes before the market has opened. You can do it anywhere up to an hour and a half before the market opens, but it's going to be at least 30 minutes prior to the open. Because this is telling me now that, well, I've sorted my universe of stocks, those 300 liquid stocks, the universe. This is telling me that, well, actually, there's about 30 of these stocks, 30 or 40 stocks they're already actively being traded before the opening bell. And this is from today. So these are today's list. We're going to look at the charts for them in a moment. But these are the actively trading stocks today as we're recording this. So there's only 40 or so stocks of those 300 that are worth looking at today. It doesn't mean that there aren't other opportunities, but this is one of those criteria that might add up to this could be an explosive candidate. Now, the other thing to note there is that there are several stocks with 100,000 shares traded in the pre-markets. Now, some of those might be news-driven, like number 3 is Pinterest, 4.5 million shares. It had earnings after hours yesterday. So there's a little bit more excitement with that stock going on today, and that could be the reason. But if there's no earnings, there could be some news-driven events that is driving the activity. It might not have hit the mainstream news, but the institutional traders and investors, the people who genuinely do move the markets, they're already in on this. So that means that this could be a good indication, a good footprint to follow to say, you know what, maybe I want to keep an eye on it. And that's all we're doing at this stage. What's on my watch list for today? What's got the explosive potential? That's what we're doing. So in the second stage is I'm gonna create a gap, and I've already kind of scanned this. So at the bottom there, you can see there's a little break, and all I've done is I've treated my watch list like a spreadsheet. I've put some blank spaces so that I can sort those 50 or so stocks. And I then have broken that list down into 2 sections. So the next thing that I've done is I've sorted the big volume stocks, anything over approximately 40,000. Let me just go back a slide so you can see. So what I've done is I've just looked down that list, down this list here, and I can see that we've got, 20, 30, 40,000 shares traded. And I can see there's not that much of a gap, because the next thing that I'm going to do is I'm going to sort the stocks that are moving, like in the pre-market. Is the current pre-market price way higher or way lower than yesterday's close? AKA, it's going to gap open. It's going to jump from yesterday's close to we're trying to predict today's open. So that's what we're doing there. So that's what I've done there. I've just put a little break in, and that's what this next slide is. And I've done the same again, having resorted the stocks by the net change, the percentage, because I've got the way that I've got this set is it's showing me the percentage change from yesterday's close price to right now in the pre-markets. So what I've got is I've used a number 1.3% is what I used. No particular reason. I could use 1.5%. I could use 2%. It depends on how many stocks I see. Sometimes we get a big list of stocks that 2, 3, 4, 5% gap as big market movements. So a little bit of common sense is applied. There was only about 40 stocks that looked like they were active in the pre-market, so it was easy to do. So I've used 1.3%. But generally, above or below 1% of the stock price is what I'm looking for. So what I've ended up with is 2 tiers of stocks. The stocks that have big volume at the top here, big volume and a big percentage change. They're gapping quite big. And that could be a good explosive opportunity. Now, the balances, and we'll look at the charts in a moment, but the balances, I don't want a stock that's gapping too much. So at the top here, we've got 8.9% percentage. And usually the benchmark I use is if there is 10% or more, double-digit percentages, I'm kind of thinking that the move was done in the gap. The move was done in the gap. So it doesn't give me much opportunity to profit from a movement after the gap. So I'm looking for something to gap on pre-market volume with the potential to move further. So usually with these double-digit percentages, that's probably it for the day. And as always, there's exceptions to every rule. It's going to go from 10 to 15%. And we've seen a few of those recently, but they're the exceptions to the rule. Most of the time, and we've seen it with Netflix, we've seen it with Intel, we've seen it with a few others where there's big double-digit gaps. And that was kind of it, at least temporarily. Now, that's also one of the criteria that we can use to look for a swing trade. So just because we don't get the day trade, we can say, okay, this is gapping. We're going to have to wait a few days, maybe a few weeks for it to rest, pause, catch its breath. Imagine that the stock has just sprinted 100 meters. It's just done a record-breaking time for the 100-meter sprints. It's going to have to rest for a while before it can go and do another record-breaking move. But it could be, again, a footprint for a bigger swing over multiple days or multiple weeks. We'll look back at that next week when we're looking at finding these explosive stocks for swing trading. Let's just focus on the day trade. So the day trade potential, again, the best I can say is it might move. And I don't like that. It might move. I'm looking for, hell yes, this is going to move. So too big a percentage, it's probably going to gap up and then move into the gap again. I don't normally like trading against the gap. I like to go with the flow. I like to go with the money, the direct. So if the institutional traders or investors, they're pushing price higher with a gap, I like to trade in the direction of the gap. So if it gaps up, I like to be bullish. If it gaps down, I usually like to be bearish. Personal preference, you can fade the gap. I don't like doing it. It's usually not something that is worth the efforts. The juice isn't worth the squeeze is the phrase I like, but it's possible if you want to do it. These decisions come down to personal preference. So the top section of stocks, they've got 100,000 shares traded pre-markets, and they've got at least 1.3% of the stock's price gapping. So from yesterday's close to when I took the screenshot 20 minutes ago, it's gapping 1.3%. The second tier is they've got the big pre-market volume. They've got the big pre-market volume, but it's a slightly smaller gap. It's not a big gap. it could still be indicative of something interesting. It's just not jumping past, well, we're going to look for support and resistance later, and we're going to look at the visual confirmation of the, like, is this a good opportunity? But we've got two tiers of stocks. Most of the time we'll find today trades, as I refer to them, the gapping opportunities on the big volume, the big gaps. And the second tier, they might not be today trades, but they might provide an opportunity tomorrow, metaphorically speaking. I appreciate tomorrow's Saturday as I'm recording this, but there might be other things that, you know, it's not quite today, but it looks like it might put in, there may be more than a day trade. So that's usually what the second list can find. And again, you've got the bonus scan for how we find swing trades, and we'll keep an eye on them. We're going to spot some in a moment. So what we're doing at this stage, and as I keep saying, for any of our regulars, you'll hear me say this phrase quite regularly, it takes longer to explain than to actually do. This all happens in 2 or 3 minutes, because all I'm doing is click, click, sorts, click, click, sorts. That's it. That's all I'm doing. It takes longer to explain than to actually do. But this is the first step in what I refer to as my production line. Step number 1 is a mechanical scan. In this case, what should I look at today? I'm only looking for 3, 4, 5 things to trade every day. That should give me at least one trade. I mean, yesterday we saw 4 trades. Let me just go and look at 4 trades. So using this scan yesterday, we found Zoom. Zoom was an opportunity. Zoom's on a call list. I'm going to look at this every day. But Zoom had a good opportunity, and we've used the same process to find these opportunities every day. CRM is another one. This one didn't go anywhere, so there's a small monetary loss on this particular one. So they're not always going to work out straight away, but we can keep an eye on it, and maybe over the next few days, the real opportunity unfolds. Cree is another one that we looked at. Again, a small opportunity in the afternoon. But again, this was highlighted in the pre-market. We had a good opportunity. And lastly, Apple was highlighted in the pre-market. You can see the shaded area in the center there. Again, pre-market volume, pre-market gap, pre-market volume. Again, it didn't quite do a big move during the day, but it was big enough for a day trade. I think there's going to be a good swing trade on that. We'll look at that in a moment. But just going to give you a few examples from yesterday's trading with the same scan, the same filter, the sorts of opportunities that we can find. Anyway, we're looking for, again, we're only looking at step 1 of this process. Again, I refer to it as a production line. So step 1, just to let you know what the production line is, we're going to look for a mechanical reason to do something. We've just looked at step number 1 for finding explosive stocks. And it means that I can do it every day with consistency. You can apply this today and tomorrow and the day after and the day after that with consistency. And that's the point. It's repeatable, it's replicatable. This is what makes it a mechanical scan. The next step that we're going to do in just a second is we're going to have a visual confirmation. Is price, the chart, is it actually doing what we're thinking, we're expecting? If a stock is gapping up, well, if that's in the context of an uptrend, or it's gapping past support or past resistance, then that might be, you know what, there could be something really explosive developing on this chart. It's a break of support, a break of resistance. That could bring even more buyers in or more sellers into this market today to give me explosive potential. We're going to look at some examples of that in a moment, but that's step number 2. When I've got that criteria, I'm then going to look for my setup. Generally speaking, I trade pullbacks. I've got 9 different variations of pullback patterns that I like to trade. They're all variations of the same thing, essentially, just to give you a heads up. But essentially, it's context that I'm looking for. So I've got 9 patterns that I'm looking for. So this will create my entry. It'll help me with the risk management. And in some cases, it helps me with projecting targets. And then the last step that I like to use is trade management. In trade management, TTE, timeout, target out, exit out. We've spoken about this before in the past, but that's my 4-step process. We've only gone through step number 1, and right now we're going to look at step number 2. So now I've got my short list of stocks. Again, remember, there's the short list of stocks that I'm looking at. I want to visually confirm or visually inspect these charts. So we're going to look at 2 slides, and then we'll look at the actual charts as the market's about to open. So explosive. So this list of stocks that we can see, again, I'm just focusing firstly at the top here on the watch. That's focusing my attention. So we can see that this stock, it has about 40,000 shares traded in the pre-market, about 6% gapping. It's getting to that point where it might be gapping too much. So this is where the visual confirmation comes into play. And this is actually a good example. 2 days ago, it also did a big gap on volume. Again, looking at the daily charts. So again, this is a good example of, okay, this could be a great swing trade. It's not giving me an opportunity to get in for the moment, maybe today. Anyway, looking at today's gap, we can just see the pre-market on the 60-minute chart at the top and the 5-minute chart at the bottom left. So we can see the price is gapping. It's jumping from yesterday's close to today's open. Again, looking at the 60-minute chart, yesterday's close to today's open, there could be a big gap. It's not traded there, it's jumped. That's what it means. So combine that with, we've got an uptrend. So we're gapping in the direction of the dominant money flow over multiple days, weeks, and months. Great, that's a good sign. That looks like there might be more than just a day trade as well. So I could keep an eye on this for a swing trade as well. Again, we'll explore that next week. But for a day trade, this could be a great potential. It's already jumped past from prior day's close. It's jumped past this resistance, this barrier points, and we're gapping above the prior days. It's just rested briefly. So this is a great candidate for, maybe there's going to be a good day trade. Maybe it's going to be a bullish trade. So I'm going to have a bias on this particular trade because of the main dominant trend. From a swing trade point of view, I don't like chasing. It's already going. I would have preferred to have got in earlier, just in the context of looking at this chart. We could have got in earlier, but again, it's not the purpose of today's scan. There could be a good day trade opportunity. So that's the sort of thing that we're looking for. And basically the question I'm asking at this point with this visual confirmation is it gapping to somewhere, or is it gapping from somewhere? You know, gapping from, say, the 50-period moving average, it's gapping from support, gapping past resistance. So it's going from a support level, it's breaking a resistance level. So that's the sort of thing that I'm looking for. We can have one or the other. In this case, we've got both. It's a good example of the two things. The next one we're looking at is Gild, G-I-L-D. Again, just 2 slides, and then we'll look at the live charts. But we can see that we've got, again, about 50,000 shares. Now, I think this is a better opportunity than the previous chart. The previous chart was gapping 6%. It's getting to that point where maybe the move has been done on the gap. And that's what I'm thinking. And certainly when we get into double digits percentages, it's like probably, again, I can't say for certain, and I hate that uncertainty, probably the move's done. I'm looking for certainty. I don't want discretion in my decisions. I want to go, okay, we've got 50,000 shares, great pre-market, maybe an institutional footprint. I've got about 2.5% gap. So it's the Goldilocks gap. It's not too big. It's not too small. It's just right. So now the visual inspection, step number 2 of our production line, is it gapping to anywhere or from anywhere? Well, we've had this big thrust. We've had a nice deep time-based retracement and price retracement, meaning that it's rested in time. It's retraced in depth. You can't quite see it, but the 20-period moving average is there. We've got this lovely bull flag. I'm sure that anyone who knows anything about charting can see that. Looking at the 60-minute chart in the top left, we've got this wonderful consolidation. Pre-markets, it's already breaking out. That's what the gap is. So it's breaking out of a 60-minute consolidation in the context of what could be a bit of a double bottom. Could this be price turning, changing, change of direction? Starting to build a picture. It looks like it's going up in the last 4 to 6 weeks. Maybe a change of direction. We've got this break of the consolidation on the 60s. And on the 5-minute chart, we can see a similar consolidation. That looks pretty cool. I like that. I like that. So this is just trying to, there's going to be at the very least, potentially, I'm looking for my entry now. I've got to wait for the market to open. But for this is what's going to put it on my watch list, the visual confirmation that this looks like a great opportunity. I like the look of it. Is everyone clear on this with the slides? Is everyone kind of clear what we're going to look for? We're going to look at several live charts now. I was just waiting for the market to open, mainly because I can see where the gap is on the daily charts. So I just wanted to kind of help you see what I see. And because until the market opens, we've kind of got to have a best guess at where we're gapping to and from on the open. So just to try and aid this explanation. Just perfect. Thanks for all your comments and your feedback, folks. Just wanted to wait for the market to open just so we could see that visually on the charts. And again, because it's a projection, it just means that it should be a little bit clearer. But that's the sort of thing that I'm looking for. It's gapping to somewhere, it's gapping from somewhere. Maybe I've got a chart pattern that I like. I recognize the bull flag. It could be a bottom in the chart. It could be turning around. There could be a new trend starting. So this is looking great. We can buy the dip in an uptrend. Again, just a quick reminder, one of the 6 things that we look for. You remember one of our previous sessions, one of the 6 things that we're looking for. So when we're approaching the chart, it's either going up, it's going down, or it's going sideways. Buy the dip, sell the rally. We can trade the range, or we can wait for the breakout. We just saw that wait for the breakouts on the 60 and 5-minute charts on Gilead, and we saw what could be a new buy the dip opportunity on the daily charts. Great, I've got context. I'm starting to build a picture. We're only looking for 6 things. We might get all of them on one chart. We might have several of them across different charts, but that's what we saw on Gilead. Got a nice rally, could be trending, and again in the last 2 weeks, double bottom. We've got this consolidation here, so we've got this breakout. Okay, cool. So the downtrend is broken. We've got a consolidation. This looks like a great buying opportunity. Consolidation on the 60s. We've got the breakout in the form of a gap. Consolidation on the 5-minute chart as a part of the gap higher. So this looks, it starts to add up to good opportunity. There's a question from Ezekiel. Backtesting, did I look at the number of failed moves? If the stock gapped higher than 10% or double-digit percentages, did I look at the failure rate? It's not that it's a failure. It's just that it's probably exhausted temporarily. And I've got to admit, I didn't look. It's all anecdotal. I've been looking at the charts. I've looked at hundreds of thousands of charts in the last 20 years. I've got anecdotal observational data. I've not got hard data, if I'm going to be honest, Ezekiel. So I've not tracked the ones that didn't. But the best ones in my experience, the ones that would make a great candidate are good pre-market volume, a small percentage, but it's also gapping past support or resistance. That's kind of like the perfect trifecta. And that's why I'm spending a bit of time on Gilead to say, this has got it all. This has got lots of factors. This makes it a great day trade candidate. It also makes it a great swing trade candidate as well. So anyone who's thinking about, well, okay, Phil, I don't want to day trade. Well, it can still be a great day trade and a great swing trade as well. It could swing higher. We can see that we've got the potential change of trend. There's other things that we'll look at. We'll explore that in a bit more detail next week. So no, I've not. But yeah, voice of experience again. Come back in 20 years, you'll have the same anecdotal data. Right, so let's go over to the charts. So now at Gilead, now the market's opened, what I was hoping to see was that can we see now that Gilead it's gapping to resistance? So a next question that you might have is, well, this may not be ready to go for the swing. So, and because it's not gapping past that, it's gapping to resistance, not past resistance. So it looks great, but it might not be a great swing trade or day trade until it's above $68. So, which conveniently is also the pre-market high. Everyone see that? Conveniently, it's also the pre-market high. So what I'm now going to do, now I've got live data, as opposed to looking at the pre-market, I can start to say, well, now if I'm bullish, I want to see price go above the pre-market high, which is about $68, which will take us above the swing high. Now, until that happens, I don't want to buy resistance. So it's just because I've got a great candidate, it doesn't automatically mean put the trade on. I'm now looking for step 3 in my production line, visual confirmation. Anyway, let's just take a look at some of the stocks. ATVI, we've got a double-digit gap, a double-digit percentage. So this is one that I'm thinking there may be some initial follow through higher, but I would imagine that this is going to rest. Yes, we've got a break. Yes, we're gapping from a consolidation in an uptrend, but the gap is just a little bit too much. So I'd rather say, let's wait for a daily retracement and get my opportunity later, because what I don't want to do is chase the trade. And we've seen this on other stocks, INTC. Intel is a good example of that, where we get this great pre-market volume. It's gapping past multiple levels of resistance, but it then rests for several days. It then retraces, it fills the gap. It doesn't always happen, just happened on this occasion, and then it turns around. So the swing trade potential is there. So you don't have to worry about an immediate trade opportunity. And this is normally what happens when we have the big percentages, the double-digit percentages. So again, coming back to Gilead is our example. It's not quite gapped past resistance. I want to see it now trade through 68. That would also be a break of the pre-market range high. That's where it stopped in the pre-market. The institutional traders didn't buy it, bid it up any higher than that level. Great, so that's what I'm looking for. So when we start to go through these top stocks, we can see Penn, it's gapping in the context of an uptrend. We've got a lovely pre-market range. Maybe we're going to see Penn State go higher. Cool. Add it to the shortlist. Win Resources. We've got price gapping. Again, I'd love to have seen it gap past resistance, as we've just said there. That could be a great candidate. It is gapping past here. So the question I'm asking is there enough potential to get a day trade in there? Probably not. Maybe $1.75. By the time it presents one of the entries that I like to look for, there might not be an opportunity. So we've got a gap. We've got volume, we've got gapping past resistance, but is there enough wiggle room for me to get a trade on after my entry setup? That's the something that you're going to have to decide. So on face value, it looks good. I actually like this for a swing trade. So what I'll do is, like with Gilead, I'll keep an eye on this, but I'm not really that concerned until it breaks resistance. Until something new happens, same thing's going to continue. And the thing that's been happening in the last few weeks is up a few days, down a few days, up a few days, down a few days. So we've got the potential. It's just not quite going yet. So that's what we're looking for, gap and go. So I need to see it go past resistance here. I keep an eye on it for a day trade. There may be $1.50 for at least a day trade. If I can get a good opportunity, I will look at. But for the swing trade, for something more than a day trade, that's what I'm looking for. 117.24 needs to be breached. That could bring fresh buyers into the market. And again, we'll see when it gets there. Plug, potential pre-market gapper. Pre-market volume, you can see it's not really gapping to anywhere on the daily chart. It's not really gapping from anywhere until something new happens. The same thing's going to continue. It's not gapping past support, past resistance. It's in the middle of that consolidation. Maybe keep an eye on it, but it's certainly not a today trade. Come back tomorrow. Johnson & Johnson. Oh, look at this. We've got rally, retracement, support, 160 support. So we're gapping in the context of an early stage trend. It's already broken out. So we've got an early stage trend gapping past these red days. Anyone who's short is probably covering. Lovely consolidation in the pre-market. So again, for a trade, I'd love to see price go above the pre-market high. So again, I'm still looking for those breaks of resistance, and I can use the pre-market as my final kind of trigger point. Again, just because of, so this for me is a great candidate. I'm waiting for price to break resistance. And again, if you look left across the charts, we could argue that there's a consolidation on the 60. And if it does go through the pre-market high, we should be able to get an entry. Looking up and left, where could it get to? So I'm looking up, I'm looking left. The next barrier point is what, $4, $5, $6 away? before it's going to potentially run into resistance. This looks like an awesome candidate. Can everyone see that? Can everyone see how we're starting to layer it on? And all we're doing is looking for one of the 6 things, the 6 ways to trade that we looked at, I think it was 2 weeks ago now. You can get that to that on YouTube. Again, we're looking for an uptrend, we're looking for a downtrend, we're looking for a range. I'm just trying to put some context on like one of the 6 things that I'm looking for. I want to go with the dominant money flow. So this could be not only a great day trade, but this could also be a great swing trade. From a swing trade point of view, all I mean by that is I can hold it overnight, maybe a few days, a few weeks. At the very least, I'm going to be looking for a retest of the recent high, Johnson & Johnson. And this is what I did with the CRE trade yesterday, CREE, looking for at least, when you're trading pullbacks, looking for at least a retracement. So this is yesterday 15-minute chart on CRE. So we can see that nice trend, deep retracement back to 20, I think it's 20-period moving average, looking left across the chart. We're at support. So we're buying the dip in an uptrend. And as it goes through prior red candles after seeing some exhaustion, then at least look for a retest. It's the same pattern that gets me in trades, that it allows me to evaluate trades, that allows me to put the next trade on. It's the same structure. Buy the dip in an uptrend. Buy the dip in an uptrend. Who would have thought? Let's take a look at CRE just so you can see the daily chart. CRE, go on CRE, there we go. Can we see the same thing? Maybe this explains why I have this trade on my watch list. This almost looks, so this is the daily chart. This almost looks like exactly like the 15-minute chart we looked at yesterday. Can everyone see that? Give me a thumbs up, give me a hell yes, give me, of course we do, Phil. The light has been firmly shone in my direction. So let me know that you get this. If I drop dead tomorrow, God forbid that I don't, and maybe you do wish that, I don't know. But if I'm not here tomorrow, whatever the reason, could you replicate this for yourselves? I'm just giggling at some of the comments. I won't read them. Some of them are a little bit rude. It's okay, Glenn. I forgive you. So similarly with Glenn, we've got the day trade opportunity we've just looked at on the slide yesterday. We've got the same opportunity there on the daily chart. Where could it get to? You know, it could get $5, $7, $8 higher. CRE looks great. This flagged up on yesterday's watch list, but now we're looking at it. We've got a nice little consolidation on the 60s in the context of an uptrend. We've not quite got any pre-market volume unlike yesterday, but it looks like it might be turning around, dipping in an uptrend. That could be good. It could be interesting. Anyway, I think my job here is done. A question from Glenn. Would I be buying options? Yes, I would use options. I'm predominantly an option trader. So the way that I place my trades are with options. You can trade with stock, you can trade with CFDs, you can trade with spread betting. It's just a way to put the trade on. You know, as far as I'm concerned, it doesn't matter. It doesn't matter. So with an option, I use what I call a stock replacement strategy. So all I'm doing is buying an at-the-money option. I want to make sure I've got enough time. Usually I'll default to about 90 days. I'd rather have more time than less time with options. And so I'll usually go to 90 days out. I'll buy an at-the-money option, either one in or one out the money. It doesn't really matter a great deal. I'm just trying to replicate I was going to buy stock anyway, but now there's a more capital effective way of expressing the trade. I'm going to use an option. That's typically what I do. Yeah, it's just nice and simple. Again, everyone's asking the same or similar question. What option do you choose? Don't overthink it. Just think, okay, how can I replicate a stock trade? That's what first and foremost what I'm thinking about. So again, I've wrapped up a little bit early today. I've wrapped up. I think I've got the main message across. Everyone seems to be happy. I don't see any questions. Everyone's saying thank you for the training on this. So this is essentially how we find explosive stocks to day trade. Now, for some of you, that's enough. You've got everything that you need to go and replicate this for yourself, which is awesome, absolutely awesome. But if you do need a little bit more help and you want to learn in the smartest possible way, in the fastest possible time, and focus on the best stocks to trade, the best times to trade, we've got one simple pattern, and you can learn this in the next 7 days. It takes an hour a day. We've also got a full trade management system, the TTE management, timeout, target out, exit out, 3 rules that we use to manage the system. And that's the real secret to success, is the management side. And once mastered, you will potentially see your results increase over time, and I'll be there to help you with it. And you'll be building confidence so that you can transition to the best possible trader that you can be. And the one thing that I promise everyone is that you will never stress over which way the markets are going, up or down. And if we do it right, we should profit in either direction. Either if the stocks go up, we'll make money. If the stocks go down, we'll also make money. As you've seen today, which is what we focused on, you should never spend hours flicking through chart after chart. That process that we went through earlier, it takes 5 minutes to do. There's the 10 stocks I'm looking at. Click, 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 go and look. Oh yeah, it's gapping past support, past resistance. Great. Put that on the watch list, and then we're waiting for the setup. You'll never be reading through boring company reports. I don't like doing it. I don't do it. So that's my promise to you. If you want help with any or all of this, would you like some help? If you do need that, send me a message, phil@antivestor.com. I don't know if what I do is right for you. Truly, I don't know that until we have a conversation. We can either email me, or if you go to antivestor.com/VWAP. And if you can't remember that, just go to the homepage, the website, antivestor.com. You can follow any of the links in any of the emails. It'll take you to the homepage. You can have some basic training. If today's your first day, that's a great place to start. And you can learn all about my methodologies and trend trading and all the rest of it. And some of the things that we've spoken about today, we've focused on the day trading scan. So if you want help with the day trading, follow the center link. And if you want to help with swing trading, which we're going to look at the swing trade scans next week, then you can follow that. And again, choose your own adventure, folks. My mission is to make you a better trader, so that you don't have to go through the weird learning curve that I went through, which, as I mentioned earlier, was the hard way of doing it. So if you want help with that, by all means, send me a message. At the very least, I'll point you off in the right direction. My focus right now is profiting at the open, which I'm going to do quite literally right now, and go and trade some of those stocks that we were looking at earlier. So if you want help with profiting at the open, send me a message. And with that said, thank you very much for your time. Thank you very much for your attention. It really does mean a lot to me that you've decided to spend an hour out of your day and spend it with me. I trust that you've got some value from this. If you've got a question or a comment, pop it in the box, and I'm sure I'll see that either later or wherever you're watching this. If you're watching this in the future on YouTube somewhere, leave a comment. I'm sure that I will see that when you pop it there. But for now, thank you for your time. Thank you for your attention. And I'll see you for next week's session of how to profit and find explosive swing trading stocks. Until then, bye for now.